What went wrong with the SEC's spot Bitcoin ETF finale? It was supposed to be a triumphant moment, a validation of sorts for the cryptocurrency industry. Instead, it turned into a complete disaster. Let's rewind a bit. The story began with the Securities and Exchange Commission, or SEC, approving 11 spot Bitcoin ETFs for trading. The news was announced via the SEC's official account, stirring up excitement in the crypto world. But the celebration was cut short. It was revealed that the SEC's account had been compromised. The approval, it seemed, was not valid. This initial blunder raised questions about the SEC's security measures. How could such a crucial account be so easily compromised? And why wasn't there a two-factor authentication in place? These were the questions echoing in the minds of investors and industry stakeholders. But the confusion didn't end there. The very next day, the Cboe exchange jumped the gun and announced the listing of the ETFs before they were officially approved. This premature announcement only added to the chaos and uncertainty swirling around the ETFs. Finally, the ETFs were approved. But the doubts lingered due to a document that mysteriously appeared on the SEC website with an incorrect URL, only to be removed later. The approval was finally confirmed when the document was re-uploaded and a spokesperson provided a link. This debacle left a sour taste in the mouths of many. SEC Chair Gary Gensler, who voted in favor of the ETFs, was criticized for his remarks about Bitcoin being a speculative and illicit asset. His stance seemed to be at odds with the approval of the ETFs, adding another layer of confusion to the mix. Industry figures, including Cathie Wood and Commissioner Hester Pierce, voiced their criticism of the SEC's actions. The approval process, which should have been a straightforward affair, had turned into a farce. So, what are the key takeaways from this disaster? Firstly, the SEC's handling of the approval raised serious questions about its security measures and overall competence. Secondly, the premature announcement by the Cboe exchange highlighted the need for better coordination and communication in the industry. And finally, the conflicting views within the SEC, as showcased by Chair Gary Gensler's comments, underscored the ongoing debate about the legitimacy and value of cryptocurrencies. This event was not just a setback for the SEC, but also a blow to the credibility of the cryptocurrency industry. The chaotic approval process did nothing to dispel the notion of cryptocurrencies being a risky and volatile investment. As the dust settles on this fiasco, it's clear that the SEC and the cryptocurrency industry have a lot of work ahead of them. The hope is that they can learn from this disaster and prevent such a debacle from happening again. Only time will tell.